Before we begin, here's how to earn continuing professional education credit for attending this session. Gain valuable insights by attending the podcast, then complete the assessment test to download your certificate. To do this, follow these simple steps. Click on the link in your description to access the session. Create a free account and attend the podcast. After the podcast, take the assessment test and download your certificate. It's easy, and it's free. We highly recommend checking out our subscription. Let's get started.
There are a lot of people who still quite don't understand what is DeFi or Web3 or those terms. So would you mind just educating our users in the layman terms? What do these terms mean? What is DeFi? What is Web3?
Yeah, totally. So let's start with DeFi. So DeFi stands for decentralized finance. And effectively what that means to me, it means different things to different people, but decentralized finance to me means that you don't need third-party intermediaries in order to transact. And so this creates a permissionless ecosystem where you don't need to, for example, provide, in a lot of DeFi, you don't need to provide KYC or know your customer information. So if I have an internet connection, I can log on to Uniswap, for example, and I can do some swaps. And it's all governed by smart contracts. I don't need to rely on a third party with an order book to fill different orders for trades like a traditional exchange.
But you would always be, like networking, or where would you suggest, because networking and staying ahead of the industry is, I think, very critical because it's a very fast moving industry. Every day, something or the others could be happening, right? So how important is that? Or do you just, where do you network to? Where do you go to? What are some sources that you regularly are a part of through which people are able to know what's happening in the industry?
I'd say first and foremost the crypto CFOs community, but I'm biased. We have close to 400 members in there, and the first year that we started this, we're in our second year now. We really wanted to build on a strong foundation of thought leaders in the industry. So if you
Right.
want to connect with the most thought leaders in the industry, the crypto CFOs community is the best place to do that, I think. Again, I'm a co-founder and the CEO of Crypto CFOs, so I'm biased, but I do think that we have a really amazing group of folks in there.
Hello, everyone, and welcome to our podcast. I'm your host, Saul, and I'm delighted to have you join us today's episode. We have a very special guest with us, Taylor Zork, who is the CEO and co-founder at Crypto CFOs. Taylor has a wealth of experience in the crypto and accounting space, and today we'll be diving into the intricacies of tax and accounting within the crypto, DeFi, and Web3 sectors. Welcome, Taylor, and thank you for joining us today.
Thank you so much for having me, Saul. It's a pleasure to be here.
Yeah, fantastic. So let's start by discussing the inspiration behind Crypto CFOs. Can you share what motivated you to start this platform?
Yeah, absolutely. So I had gotten into the space back in 2018. So I was really, for me, I had heard about Bitcoin back in 2013 when I was at PricewaterhouseCoopers.
Mm-hmm.
But for me back then, I was just starting my career and didn't have a lot of investable money and saw kind of Bitcoin as pretty speculative back then. So I didn't really think too much about it. But when I heard more about what Ethereum was and what smart contracts could do, and basically like programmable money, for me, that really kind of was the aha moment, the epiphany for me. So I really saw the need for this type of asset class and just how it could profoundly change the world of finance. And so
Right.
I started to look for different avenues to get involved in the industry. I started by investing, but then I saw a great need for accounting and tax help, where a lot of kind of like the old school accountants weren't looking into this industry because it was complicated. There was a lack of regulatory clarity. And so I started just helping startups. I initially started with just doing kind of like light accounting and month end reconciliation work, and then got involved with different startups as a CFO, and really got serious about it in the summer of 2020 when I joined a new project that was launching. And it was during the summer of DeFi. So lots of challenging new use cases and different things happening. We were working with decentralized exchanges, and automated market makers. And so I couldn't find anyone to help me within the organization. As a CFO, I was basically doing everything from the ground up. And so after leaving that team, I decided, hey, I need to help upskill this industry because there's a lot of work and not a
Mhm.
lot of people serving it. And
Right.
so I teamed up with my business partners, and we decided we were going to create a community to help educate folks and bring them up to speed on Web3 and digital assets.
Oh, that's fantastic. That's fantastic. The crypto field has been an ever-changing field. And I'm pretty certain that, like you mentioned that, the challenge that you face, that there was no clear path in terms of how the complexities are there and what is the way around it. And you talked about it. There are a lot of people who still quite don't understand what is DeFi or Web3 or those terms. So would you mind just educating our users in the layman terms? What do these terms mean? What is DeFi? What is Web3?
Yeah, totally. So let's start with DeFi. So DeFi stands for decentralized finance, and effectively what that means to me, it means different things to different people, but decentralized finance to me means that you don't need third-party intermediaries in order to transact. And so this creates a permissionless ecosystem where you don't need to, for example, provide in a lot of DeFi, you don't need to provide KYC or know your customer information. So if I have an internet connection, I can log on to Uniswap, for example, and I can do some swaps. And it's all governed by smart contracts. I don't need to rely on a third party with an order book to fill different orders for trades. Like a traditional exchange, they have an order book where you have buyers matched up with sellers.
Right,
In the decentralized finance world, specifically on decentralized exchanges, you
right,
have a liquid pool of assets that people post into, and they
right,
earn a fee for what transactions go through there. But you
right.
don't need to have specific buyers and sellers. You just need to have these little liquidity pools. And so, decentralized finance is an ecosystem of tools that don't require permission to use. So another example of a DeFi instrument is Aave, for example, which is a smart contract protocol where you can lend and borrow funds without you don't need a credit check. You just need to be able to post collateral. And if you post collateral, you can borrow against that collateral. And you just have to meet a certain loan to value threshold. So, yeah, decentralized finance to me just means an ecosystem where you can transact in a decentralized way where you don't need a third party's approval in order to do so. You don't need a bank, you don't need anything else. So, you and I can transact in a trustless manner without
Uh-huh.
really needing to know each other or know anything about each other. And then when we talk about Web3, um, Web3 is essentially the next iteration of the internet. So we have, what you see as the kind of internet traditionally right now, we call that
Right.
Web2. And
Yeah.
the only difference between Web2 and Web3 is just integrating that wallet functionality that governs like DeFi into the Web3. So a good example of this is I'm a member of the Flyfish Clubs, for example. It's a diners club that's opening in New York City this
Uh-huh.
year. They just got their conditional liquor license. They're about to launch, and membership is governed. So reservations can only be done through people who hold their NFT. And so on their website, when you go to make a reservation, you have to connect your wallet, which validates to them that you hold their NFT and that you're allowed to make a reservation. So that's the Web3 aspect. It's joining the blockchain, the digital assets to the existing internet and kind of adding the additional functionality that brings.
Interesting. Very, very interesting. You mentioned another term called NFT, non-fungible tokens, correct?
Yes.
Yeah.
Yes.
If when I understand NFT, I understand that it was more of, I mean, I just read this on the internet sometime that NFT is a way for people to have authenticity on something, like the music industry, the art, photography, everything. Like when you have an NFT, you're kind of putting an ownership on a particular digital item and it protects you from privacy or something. I mean, have I understood this right? Or is there a better
Yeah,
way?
no, you're right on. So a lot of people think of NFTs as just like digital art. Like, the common example is the Board Ape Yacht Club, where you have just basically cartoon, apes that people buy, and for some reason they're worth hundreds of thousands of dollars. And
Mm-hmm.
the reasoning behind that is because, you know, it's absolutely correct. Someone could just copy that image and paste it and use that image. It's not going to protect you from using that image, but it's proving that you're the original or you're the actual owner of that digital art. And it doesn't have to be just digital art. It could be music, like you allude to. It could be the royalties to music. So it could be a proof that you hold the royalty license for something.
Right.
People are starting to tokenize real estate and things like that. So you could have NFTs representing real estate ownership, or there are some artists who they release a digital artwork and then they say, if you want to burn that digital artwork, so destroy it, we'll give you the physical version in real life. So NFTs are essentially like being able to verify the authenticity and the origin of something on chain cryptographically. So different from fungible tokens like Ethereum, like Bitcoin, like USDC. These are all fungible because one Bitcoin equals one Bitcoin.
Right.
Different Bored Ape Yacht Club tokens in the same collection could have wildly different prices because of the different attributes that they have, or just based on who previously owned it as well. Like if Eminem previously owned a Bored Ape Yacht Club, NFT, which he used to own one, I think. I don't know if he still does. But if he sold that, it'd probably be worth more because someone would say, "Oh, Eminem used to own that," right? And so
Nice.
you're able to track the ownership as it transfers to different people as well.
That's very interesting. Now that you've explained it to me, I'm already thinking maybe I should create an NFT for our podcast series,
Yeah. So another cool aspect of NFTs, and I don't want to get too far down the rabbit hole because I know this is kind of like a surface level conversation, but you can also do things like soul-bound NFTs, which is a really cool concept. We're starting to use this for our for some of the certificates that we issue in the crypto CFOs community. It's basically an NFT that the person who issues it, they put restrictions on it so that, like, if you receive, let's say in the future, you receive a degree from a university and they issue it to you as an NFT.
Correct.
Normally NFTs, you can transfer them at will to different whoever you want it to, but you obviously wouldn't want someone to send a degree in mathematics to someone else to say, so that they could say that they're a PhD in mathematics. So a soulbound token is something that you can force the person, they can't sell it, they can't move it from that wallet, so that when you've earned a degree or a certificate, they can't then move it down the line. So lots of cool things you can do with NFTs.
Brilliant. This is so brilliant. It just gets me thinking on so many fronts. But, I want to now just move this segment to a little bit different and talk about more about the complexities. So, I would like to delve into the complexities of tax and accounting within this crypto, DeFi, and Web3 sectors, right? So, how are these activities impacting the area of tax and accounting?
Yeah, so that's a really good question, and there's a lot of impacts. The key challenge here is, for a long time we were operating in a world where there was not a lot of regulation or a lot of regulatory clarity. Recently, we've gotten a little bit more. We have the FASB updates, so that we're going to be using fair value accounting for businesses and for that realm. We have the IRS broker regs that were proposed that created the new 1099 digital asset form that's going to be required as well. So there's a lot of complexity still, but where we find the most challenge with people that are kind of unfamiliar with this industry is, traditionally in the accounting and tax field, specifically the tax field, accountants relied on things like 1099s as like the gold standard of information for different types of things. So if someone earned wages as a independent contractor, they'd receive a 1099, and that's what the government's going to receive. So that's kind of like the good information. Obviously, you're going to take the information that your client gives you separate from that and combine those sources. But there's this perception in Web3 as well that, like, oh, if my client receives a 1099 from Coinbase, for example, I'm just going to use that and I'm going to report that information. But a challenge that arises with Web3 and digital assets is that what Coinbase is reporting to you on their 1099 and the information that they're reporting to the IRS is limited to what they have on their own platform.
Correct.
So the challenge arises in, if you moved funds off of Coinbase to then transact on DeFi, like we were talking about before, whether you're doing decentralized exchanges or you're lending and borrowing, or you're going out and you're kind of transacting in the real Web3 world,
Right.
and then you bring funds back to Coinbase, Coinbase doesn't, they could figure it out, but they don't have an obligation to report what happened off of their site, right? Off of their
Right.
centralized exchange. So
Right.
they won't be able to track your cost basis information accurately. And so they're going to see this new stuff coming in as, different digital assets, when in reality you could have moved, one Bitcoin off, done lots of different stuff, and then moved it back in, right?
Right.
And so I think one of the biggest challenges is educating the Web2 kind of native accounting folks on the nuances that digital assets create, right? We need to properly be able to track cost basis. In Web3, cost basis is the holy grail of crypto accounting, right? You need
Right.
to be able to track your cost basis across different platforms. And it becomes more and more challenging as you get onto different chains, because you can do what's called bridging. So if you're transacting on the Ethereum blockchain and you wanted to move those assets to a cheaper layer 2 blockchain like Polygon, for example, where the fees are a lot lower and you can get a lot more done from a cost perspective, but still you're limited on, it limits the security of it is a little bit by moving to the layer 2s. But
Right.
bridging those assets, you need to be able to track the cost basis on that and make sure that you're following that properly. So the biggest challenges arise in properly tracking the cost basis of your assets and being able to have really good documentation of what's happening throughout the process.
Do you want to earn CPE credit? Take this course of My CPE to earn free credit. Click the link in the description to get started.
Yeah, you bring out a very good point. You said documentation, because while you were saying this, I have had, because I'll tell you what happened when the pandemic came in. The cryptocurrencies saw a significant boom in their prices. Everybody's buying crypto because I guess there was no regulation in place, and you could just take some money from your bank, attach it to some exchange. You don't really, there wasn't really like a wallet kind of thing. The exchanges themselves had their own wallets, and there's a lot of volatility happening. I'm buying Bitcoin in the morning and I'm selling it by afternoon. I'm buying something else, Ethereum, in the evening, and I'm selling it 2 days later. So there's a lot of volatility happening. There's a lot of profit booking, probably loss booking as well happening, because somebody thought, I don't know, Elon Musk posted like Shiba Inu and everybody's now just buying Shiba Inu, and then the price depreciates and all that. But there's like a lot of volatility happening. This is small scale people, but then there were also millionaires who invested into it. So they must have had large volumes of transactions happening. So usually in a business, in a regular course of business, when a sale happens in an entire day, if it was a retail industry, all the sales that have happened in a day, you take out the sales register and you record it into the accounting books, or probably at the end of the week or something. But with crypto, it's how do we get the access? Because there has to be an accounting for all these things, and this needs to be put into the language of accounting that the industry understands. And what, I don't know, do you get like a ledger from everywhere that you transact, or how does that work?
So you bring up a lot of good points. I mean, ultimately, blockchain technology is it's an accounting tool at its core, right? It's a ledger, and so it's distributed and it's maintained by folks around the globe. But it's a ledger. It's an accounting tool, and so since I originally got involved in the industry back in 2018, the tools that leverage the data on chain and help accountants to better digest it and then get it into the more traditional ledger systems like a QuickBooks or a Zero or SAP or whatever they're using.
Mhm.
Those have come a long way. So there's a lot of subledger tools out there for businesses to be able to codify transactions, and they're actually getting better and better at recognizing what types of transactions they are and
Right.
presenting it to the accounting folks so that they have tools. Back when I was a CFO, I was using Excel, which I do not recommend anyone does. But there just wasn't great tools out there for doing this stuff at the time, and they existed. I just wasn't as aware of them, and because of the nature of the business that I was a part of, we were adding new chains all the time, and so it was difficult for a lot of those subledger tools to keep up. Now they've gotten a lot better about their integrations and about adding new chains as they come online.
Right.
So you can take a look at line at the top tools. There's a lot of great ones out there that help accountants to categorize these different transactions and track them from different wallets and different locations. But it all starts with having really great wallet hygiene. And what I mean by that is, like, similarly to how with a traditional in the traditional finance industry, when you have a bank account, you don't want to be mixing, or when you have a business, for example, you don't want to be mixing your personal funds with your business funds. It just gets messy, right? It's the
Right.
same kind of tools, same set of sort of mindset in crypto. You don't want to mix your personal wallets with your business wallets. If you're starting a business, mint some new wallets so that you can properly make sure that everything in those wallets are solely business use. And
Right.
then the fact is that in Web3, it's a lot easier to create new wallets. So there's not the same barriers that there are in traditional finance, where if you want to create a new bank account, you gotta fill out some forms or go in and like spend some time. Some of them you can do online, but most of the time it's like you have to go in person. In Web3, with a couple of clicks, I can create a new wallet. So while that creates a convenience aspect, it also creates this aspect where you could have 30 different wallets in an organization, which most of the time is going to be way too much, right?
Yeah.
And so you want to have really clean wallet hygiene where you have, maybe it's 4 different accounts. You have a treasury account that's more secure. Maybe it has multi-sig technology attached to it, which is basically means you need multiple signatures from multiple different users in order to access the funds. So kind of like having dual signatures required on a check, right? In
Right.
traditional finance. That's what multi-sig is, except much more secure because it's secured by
Yes.
cryptography. You probably want to have like so those treasury funds should probably be limited to like um, funds should only come out of those to fund the other accounts, right? And then you might want to have like a payroll account so that you know that any transactions coming out of that are dedicated to payroll, and so it's easier to classify and codify those things. And then maybe you want to have an operations account where maybe it's lower value stuff. It doesn't have as large of a running balance, but it's for the quicker transactions that you need to make. We want to be agile, so we want to be able to pay people really quickly or pay for services really quickly. So it's a lower threshold, and then maybe it's like an operations account. And so you want to be very dialed in on what each wallet's use case is and what the security measures you have behind it. So I know I
Okay.
went on a longer tangent on there, but it's all of this stuff is really important when you're considering digital assets.
No, I agree to you. I agree to you because I guess, as this industry evolved, we all saw how there was a need for regulation in place, and now there was a time when everybody was doing crypto, but now a lot of businesses have taken a backseat. A lot of businesses flourished, and now they are also facing FTX being one of the examples. Uh, there's some others as well. So in this industry, I know this is not related to tax or accounting, but since you've been in this industry for a long time, I just wanted to know what are some regulatory uncertainties and challenges that are currently being faced by the professionals in this industry?
Um, what aren't? It's like there's so many regulatory challenges here. I think the biggest one facing the industry right now is which assets are going to be considered securities. And right now, the SEC is investigating the Ethereum Foundation to see whether if Ethereum is a security, and they're basically trying to evaluate the Howey test and how it applies to the Ethereum Foundation specifically. And I
Right.
think that this case is one to watch because if ETH is deemed a security, I think that a lot of other digital assets are going to be considered securities as well, just because a lot of them emulate how Ethereum is run, whether it's because of proof of stake or if it's because of the involvement that the Ethereum Foundation had at the beginning. One challenge that I have with the argument that the SEC is making with Ethereum specifically is that some of the things that they're outlining that make ETH a security were relative to when ETH was first started and when ETH was proof of work. But then
Uh-huh.
on the other side of it, they're saying that, okay, once ETH switched to proof of stake, that's when it became a security because of all these other things. And so you can't have your cake and eat it too. You got to look at one set of facts and circumstances. And I think that that's where the SEC might struggle in pinning ETH as a security, because you have things and facts that were true after the switch to proof of stake versus what Ethereum was when it launched. And to be frank, ETH probably was a security at launch because they had private sales and they had just the characteristics around the sale. But we've also heard people in the SEC saying that something can start off as a security and migrate away from that if it's
Mhm.
sufficiently decentralized. And so we need more clarity. I think the biggest thing we need more clarity on is, what does sufficiently decentralized mean? What makes a digital asset sufficiently decentralized? I would say that it's easy to say that Bitcoin is sufficiently decentralized. There's no controlling party. No one knows who Satoshi Nakamoto is.
Yeah.
The wallet addresses tied to Satoshi Nakamoto haven't moved funds in, in a decade. So, I think that it's pretty clear that Bitcoin, we've already established that Bitcoin is not a security, it's a commodity. And so I think it'll be interesting to see how this plays out with um, with the Ethereum Foundation, and whether ETH is deemed as security here as well.
All right. Fair enough. Fair enough. Now, you know, I want to like talk, I want to like move the spotlight more over crypto CFO solutions and offerings, right? Let's talk about how crypto CFOs is helping professionals navigate these complexities, right? How do you help professionals in the tax and accounting space within this Web3 space? Or if somebody's alien, if somebody wanted to get into it, how do you help them? Tell me about it.
Yeah. So one of the biggest challenges I had when I was, working as an active crypto CFO in the space, I still take on projects, but it's not as much as my focus. I'm focused more on educating. Uh, the biggest challenge was coming up against new and evolving issues. Specifically, I was looking at LP token accounting. So what we were talking about with liquidity pools, when you deposit funds into a liquidity pool, you receive these liquidity tokens. Now it's a liquidity NFT. It depends on the platform, but there's different avenues to track how much liquidity you've posted into a liquidity pool. But
Right.
this was a new type of asset with a new use case that had never been used in traditional finance. And so it was really helpful for me to meet. I was meeting regularly with a professor, that was working on this stuff. His name is Dr. Sean Stein Smith. I would have meetings with him. I would have meetings with the CFO of a subledger, Gilded. They recently got bought out by Bitwave. Joey Ryan. So we were all talking, and we would kind of have these meetings of the minds where we would say, "Hey, I'm coming up with against this new evolving issue in the crypto space. Let's talk about it. How should we account for this?" And you really have to do that in this industry because the regulations are 5 to 6 years lagging behind what the industry is doing, and so it requires you to kind of put on your accounting theory hat and try to tie these assets to assets in traditional finance that they most resemble in
Right.
order to come up with a reasonable accounting treatment, right? And so that requires a network of individuals that are in this space that already know this space in order
Right.
to have those intelligent discussions. And
Mhm.
so that's why we created the crypto CFOs community. We wanted to have a space where accounting and tax professionals could come together and work out issues that are constantly evolving, and the goalposts are constantly moving because the regulations are constantly changing. So we
That's
also wanted a
impressive.
space. Yeah,
Yeah.
we also wanted a space where folks who wanted to enter the space had a place to ask the dumb questions. There's no dumb questions in Web3, right? But like to ask those questions and not feel like they're exposing themselves on like a LinkedIn,
Yep.
but also are in a platform that feels familiar to them. So we didn't want to just have a Slack group where people are lost. We wanted it to feel like a real community. So we created our own platform. It feels a lot like LinkedIn, but it's specific just to crypto tax and accounting. We have weekly discussions where we unwrap and unwind the newest and most relevant issues in the space. And we've created a safe space for folks to, whether you're already operating in the space and you're looking to train up new staff, or you want to enter the space and pursue a niche that's becoming a necessity in the world of finance. You can learn based on we have 100 hours worth of content, video content on there where we teach you guys all about everything from A to Z in crypto. So it was really born out of this need for us to have a safe space to discuss these things and not feel like you're exposing what you don't know to the world. And also, just connecting with individuals, because if anyone tells you that they know everything about Web3, they're either ignorant or they're lying, right?
Okay.
There's too much to know in this field, and there's so many ways that you can specialize. Like I use this example all the time. We have a crypto CFO's member who focuses on NFT sales taxes. That one little field is an entire niche that is hundreds of millions of dollars deep, right? If not billions
Absolutely.
of dollars deep. So, you can specialize on the smallest niche within this niche and really make a name for yourself. And I think that that's what we're trying to encourage. And we're trying to really develop those best practices. We want to be a voice for the industry as well. So we recently gave our response to FASB before, when they were taking questions on the new fair value rules, we provided a community-led response. So we met within the community over like a 6-week period to develop really thoughtful answers as a community to the questions that they posed. And then we sent those in. So we're really trying to act as a voice for the industry as well.
Access latest and trending CPE courses with my CPE's Unlimited Access subscription. Subscribe now.
So if in a nutshell, you offer like so many things on your on your portal, right? There is videos, there is a forum, I guess. Could you just like
Yep.
just list them out, like what all
Yeah,
is?
yeah.
Yeah.
Yeah, so there's like a news feed that has, you can post in you asking questions or posting what events you have coming up, or let's say you have a meetup in your area and you want to see if there's any other crypto CFOs in the area that want to connect. If you wanted to connect with individuals from different jurisdictions, we have, I think, 34 different countries represented in our community. So if you're working with a client that has a foot in UAE, in Dubai, for example, and you want to connect with that person about the regulations there, you could reach out to someone there. We have folks from Australia, we have folks from Europe, the UK, South Africa. So yeah, we have the news feed where you can kind of post. We have different groups, which kind of, if you want to filter what type of news and content you receive, you can join different groups to see, like, we have a CPA and an EA group. We have a bookkeepers group, tax professionals group. So, and we have our different vendor partners as well. So as I was mentioning earlier in the call, you're going to want to use tools and subledgers that will help you kind of make sense of this stuff. And so we've partnered with 5 or 6 different subledgers that are present in our community, where you can reach out to them directly there, get demos, get special discounts on their products, or just engage with their teams to learn more about their products. And then, yeah, we have on-demand courses, in our community as well. And then we are also rolling out a certificate program for folks that want to get our stamp of approval, where we take you on a tour through the crypto. The backbone of that course is a 3-hour trip around the cryptoverse, where I literally walk you through the steps to on-ramp digital assets via Coinbase. We set up a non-custodial wallet. We do some decentralized exchange transactions and some lending and borrowing transactions, like we talked about before, on Uniswap and on Aave, NFT stuff, and then we unwind everything and reconcile it all. So it's really a practical walkthrough. The entire certification program is about 13 hours, but it's
Right.
really like, if you've gone through that, people in the industry know that we've vetted you. There's an exam at the end. You know your stuff, at least to a certain degree, in digital assets. Maybe you don't know everything, because like we said, you can't know everything, but we'll get you up to speed, so that if you want to join an organization that's working in digital assets, or you want to break out on your own and start attracting clients, that's what the goal of this certification is going to be as well. And that's launching,
Yeah.
I think, today or tomorrow. So we're
Yeah.
about to announce that.
No, absolutely. And I guess there's also one more angle, because I have spoken to a lot of CPAs, and they have also raised this concern that they wouldn't quite know, because usually what happens is towards the end of the year, the infamous shoebox of receipts, that comes, and when the tax filing season comes, and that's when they realize that, oh, they see that entry in their bank account, and that's going to some exchange, and they realize that, okay, that has happened. And then that question mark comes that, okay, where did this money go to? And then they're like, oh, I bought something, like some crypto or something, or maybe some art that they saw somewhere, which is to be traded in crypto, and you had there to transfer funds into some wallet and something, and that happens. And then they run into this question mark, but how do I account for this? Now, currently, there is this regulation that has come in, that now everybody is required to, the exchanges are required to issue the 1099 TA, and those kind of like help the CPAs to know that, where it's standing. But then that's the individual part. What about businesses? Like, you are actually doing accounts for a business, and then suddenly you realize that the business used some of its funds to buy something for its business on the crypto exchange. Is that even allowed?
Yeah, I mean, it's allowed. You have to, the KYB process on like sites like Coinbase is pretty rigorous. So they really want to understand who, because in order to transfer funds off of Coinbase, or like off ramp your cash back to your bank account on Coinbase or any of the other exchanges, they're required to get KYC information for you from an individual level. So that just means know your customer. They want to have your ID. They want to know who you are, where you're from, what jurisdictions you're in. And they have a very rigorous KYB process for businesses that want to use their centralized exchanges. And so they want to know who are the owners of the company, where is their wealth derived. It's very rigorous, but so it is allowed for businesses to hold Bitcoin. I mean, MicroStrategy has done it very famously. They've been buying up as much Bitcoin as they can.
Mm-hmm.
And the key here is proactivity, right? You don't want to be the accountant that finds out at the end of the year that your client has been transacting in crypto all year round and they're just bringing you a box of receipts, because it's a lot harder to unwind this stuff after the fact. And
Yes.
that's where a big part of the opportunity for accounting and tax professionals comes from in Web3, is the fact that you have these opportunities to have multiple touch points with your clients throughout the year. And you should be taking advantage of it. You should be making sure that you're checking with your clients, whether it's monthly or quarterly, depending on whether they're an individual or a business, depending on the volume of Web3 assets they're transacting in. You want to be able to check in with them. And a lot of times, like if you're using a crypto tax software for an individual, for example, you can, if they're a client from a prior year and you already have their wallet information in your system, you can see the transactions that are happening throughout the year. And so you can reach out to your client and say, hey, I saw that you made some trades here. Let's just go through them and clarify them, so that you're not waiting until the end of the year at tax time to do all of them at once. And so that's for the individual side. For the business side, most people who are getting into Web3 that are kind of more traditional Web2 businesses are really only doing it to accept another payment method, right? Or they're paying folks in a jurisdiction where it's challenging to go through the traditional banking system. Let's say in Venezuela, for example, you're hiring a contractor and you want to get them funds quickly, and they want to accept USDC. Maybe you go and you purchase some USDC and you send it to them. That sort of stuff's not going to be that complicated to unwind. There's a lot of it's but when you get into, okay, we're buying and holding Bitcoin, or we're going out and we're transacting, or we're kind of trying to chase this meme coin craze as a business, I don't recommend that. But I'm sure there are businesses that are doing that. That's where you really want to be. You want to have your accounting professional involved, and you want to make sure that they understand digital assets, because like we said with the 1099 reporting, there's going to be a lot of information that's reporting from that. And so if you rely on solely these informational reports that the exchanges are issuing, you're going to miss a big part of the picture, and your clients may way overpay on their taxes. So I would say the biggest thing I can recommend is getting your accountant involved from the start, before you even start transacting in digital assets, so that they're aware of it, and so that they can take the steps to help you document this properly, so that it's not a rat's nest to unwind. Because I've had to unwind rat's nests in the digital asset industry, and frankly, it's expensive for the client, because when you are forced to get into the weeds like that, it gets very complicated and it takes a lot of man hours. And so if you're not proactive about this, it can be a very expensive accounting and tax nightmare at the end of it, or a very expensive IRS nightmare, right? So you want to avoid both of those things.
Yeah, absolutely, absolutely. And then there's that there are two things, right? One is you're transacted, and one is you're holding it. You mentioned that if you're holding it, it's going to be classified as an asset, or it's an asset in the making, because you bought it at something. So because in the business, you got to record your assets at book value, at cost value. But then the value at which you bought that asset, somebody else could have bought that asset at a different value. So there is that thing. I think that's what you're talking about when we talked about cost basis. I'm not sure, right?
Yep.
But then there is also that when you're transacted, and securities also has its own laws regarding the short-term and long-term capital gains. So does something similar apply to cryptos as well?
So, well, when you're talking about individuals, yes, they'll have short-term and long-term capital gains based on their holding period of the asset. So if they've held it for greater than 1 year, they'll have a long-term capital gain versus short-term capital gains, which the long-term capital gains rates are much more favorable. So if you can wait that extra year, that extra kind of however long it takes to get you to the 1 year holding period, it's always going to be beneficial to do so, assuming that you're not waiting too long and the market crashes, right? That's happened to me. I was trying to get a better tax position and waited and waited and waited, and then everything crashed. And you want to get out in profit first and foremost, but if you can manage it so that it's a longer holding period into that 1 year mark, it's going to be better from a tax perspective. From a business standpoint, we've actually moved to fair value of reporting now. So businesses have to report digital assets now at their fair value at the end of the different periods. So you
Right.
can read more about that relating to that. We have courses on that in the crypto CFOs community. We'll be uploading some of those to my CP as well. So you'll be able to check in on those FASB updates led by different instructors in our community. So for more detail on that, look at those more extended courses because it's a lot of stuff to digest. But now we have moved to fair value reporting in businesses. So that just means that you report what that asset is worth at the end of the period. And if there's an unrealized gain or loss, you'll report that on your balance sheet. It's not a tax impact, but it's a like a book impact on whether you're reporting for covenants to the banks or whatever. You'll have
Yes.
to report that on your balance sheet, those
Oh,
unrealized
yeah,
gains and
absolutely.
losses.
Absolutely. Very rightly said. And, I'm pretty certain that, there's a lot on crypto CFOs, and I'm really excited for, us to also see, the courses that we're going to be doing together. I'm really excited for that as well. But you would always be, like networking, or where would you suggest, because networking and staying ahead of the industry is, I think, very critical because it's a very fast moving industry. Every day, something or the others could be happening, right? So how important is that? Or do you just, like, where do you network to? Like, where do you go to? What are some sources that you regularly are a part of through which people are able to know what's happening in the industry?
I'd say first and foremost the crypto CFOs community, but I'm biased. We have close to 400 members in there, and the first year that we started this, we're in our second year now. We really wanted to build on a strong foundation of thought leaders in the industry. So if you
Right.
want to connect with the most thought leaders in the industry, the crypto CFOs community is the best place to do that, I think. Again, I'm a co-founder and the CEO of Crypto CFOs, so I'm biased, but I do think that we have a really amazing group of folks in there. But outside of that, I feel like this industry is really open to networking. I think that the more degens that aren't involved in the tax and finance landscape of digital assets, you can find those people more on like X, or now a lot of people are migrating to Farcaster or Warpcaster, which is kind of similar to Twitter, X. So a lot of the community is on Twitter, but I think that if you're a tax or accounting professional in the space, LinkedIn is a really great spot. I mean, that's where I built a lot of my connections. And I think that, if you want to connect with other businesses, if you want to connect with other accounting pros, LinkedIn is a great tool for that. And I feel that, I come from the cannabis industry as well. I did a lot of work with, I still run an accounting firm focused on the cannabis industry. And I've noticed that breaking into cannabis when I did it back in like 2017 or so was more, I think, hesitant to bring in new folks, and they saw accountants as like the suits that no one wanted to talk to,
Right.
and I think that there was a stigma against accounting and tax professionals, and just based on where the industry came from. But the exact opposite is true in Web3. I feel like everyone who I reach out to in the Web3 space, most people are really willing to talk. Most people want to connect. They want to hop on a Zoom. I would say my biggest recommendation to folks is just start reaching out and just saying, like, you want to develop a rapport with people. So you want to be engaging with them, engaging with their posts, but eventually maybe reach out and say, hey, I'd love to connect on a Zoom call. That's how we built the crypto CFOs community and a lot of our relationships. We were on calls with people, 3, 4, or 5 Zoom calls a week, just with new networking opportunities, just to connect with people, just to see what they were doing in the space. It's a big enough space to where people aren't going to be worried about you as competition if there's too many people to serve and not enough people serving the industry. So I would just take the leap and reach out to people and try to connect. That's how we built the CTAC conference. We recently launched Crypto Tax and Accounting Conference, and we had 61 speakers and over 50 hours of content over the span of a week on a virtual conference based on
Nice.
the relationships that we built over the course of a 2-year period. And so that was all mostly from LinkedIn. That's what I would recommend. Crypto CFOs community, LinkedIn, start connecting with folks. Obviously you want to develop some sort of familiarity before you just ask to hop on a call.
Yeah.
But hopping on calls with people, getting face-to-face interactions is really the best way to do it, I think.
I agree. I agree. Well, thank you, Taylor. Thank you for sharing your valuable insights on navigating the complexities of tax and accounting in the crypto space. It's been an enlightening discussion, and I'm sure our audience have gained a lot from our today's conversation. Do you have any closing remarks or a future outlook you would like to share?
Yeah, thank you so much for having me. I think that the last kind of remarks I would say is that if you're really serious about getting involved in this industry, I would learn by doing, right? Anyone who's been involved in the space for a long period of time will tell you that the only real way to demystify this stuff and to make it make sense in your own mind is to do transactions on chain and to learn about it that way. And so we created a course in the crypto CFOs community called A Trip Around the Cryptoverse. It's a 3-hour course. I think that's a really strong way to learn it because you can play around, let's say $20 worth of Matic, which is the token for the Polygon network. And you can
Right.
do transactions for 1 cent or 2 cent where you're just playing around with the different DeFi tools and following what happens on chain. And I think that doing stuff like that, whether it's through a structured course or whether you're just playing around on your own, is really the best way to learn this stuff. And obviously, taking courses through my CPE or through whoever is going to get you that next level, but having that foundational knowledge of actually transacting on chain and seeing what that looks like is going to get you above and beyond what most people can do. So that's what I would recommend to folks.
Well, thank you. Thank you once again, Taylor, for joining us today. And thank you to all our listeners for tuning into our podcast. Stay tuned for more insightful discussions on topics shaping the future of various industries. Thank you once again. Have a blessed day. Cheers.
Access latest and trending CPE courses with my CPE's Unlimited Access subscription. Subscribe now.